Hey everybody, it's me, Joelle Terranova, founder of GetHouseReady.com. I just wanted to come on. We just started our brand new YouTube channel, and so it's our endeavor to give as much information as possible to educate first-time home buyers to really understand the process and what happens and what you may need in order to get into a new home. Why is it that we're talking about all of this now? Well, we're just now getting over the curve or the hump of coronavirus, and interest rates are at ridiculous lows, meaning the cost to borrow money is ridiculously cheap. I've been doing this for 15 years. I've never seen anything like that. And so, as someone who's well versed in this industry, it's my endeavor to educate as many people as possible so that if they choose to, they can take advantage of this time and what it means, especially to those who are first time home buyers. But you don't have to be a first time home buyer, excuse me, to take advantage of everything that's going on. However, if you are a first time home buyer, you might not understand some things, excuse me, and it might put you into fear mode. And I want you to be able to do this confidently, and confidence comes from education. So I want to be able to talk to you about the first time home buying experience, some things to look for, and things to make this a lot easier for you. So, first, let's talk about the things that are needed in order to be a first time home buyer. You're going to need 2 years of your income tax returns. If for some reason they're lost, all you have to do is go to www.irs.gov. You can order your transcripts right online. I can't tell you how many people have felt that home ownership was not for them, either because they didn't know where their tax returns were, they hadn't filed their tax returns in some years. You can go on irs.gov, get your old W-2s, get your old income statements, and prepare your tax returns. If you know how to prepare them yourself, you can go to a website where it's free for most people. It's called 1040now.com. You can go to TurboTax. You can go to an accountant, a trusted friend who knows how to do taxes. You can get the tax forms, the 1040s for previous years right off of irs.gov and turn those babies in. Like, don't allow that to stop you. You're going to need 2 years of W-2s because any bank is going to want at least 2 years of work history. Again, if you don't know where they're at, you don't have that documentation, simply go to www.irs.gov. You can get your previous years of W-2s there. You're going to need the last 30 days of pay stubs. If you're on like disability and you're getting a disability check-in from the state, that any type of income that you're getting that's being deposited, you'll need 30 days of proof of that. Depending on the bank that you're going to be doing the loan with, you may need anywhere between 3 to 6 months of bank statements. So you want to make sure that you have a valid bank account. If for some reason you do not, we can help you with that. We'll talk about that in just a little bit. You'll need a copy of your state ID, any type of state ID. And if someone is planning to give you a gift, sometimes grandma may have a couple thousand that she wants to give you, or another family member, a trusted friend, then you'll want to make sure that if they're going to gift you anything, that they put the intention of the gift in a letter. What's going to be super important is that the letter clearly states that it is not a loan to be paid back. So if grandma's giving you $5,000 and it's not going to be a loan, it just needs to state that in the gift that it's indeed a gift. Make sure your credit is right. An 850 is an excellent credit score. With what's going on now, you'll definitely want anything over a 680. 700s are great. That's something that we help our clients. Our company is real estate based. So we are working with you until you get those keys into your hand. So one of the major things that stand in clients' way sometimes is credit score. And so we have right here in-house processors that'll get that credit score up really, really fast so we can get you the pre-approval you need to shop. So again, since our business is real estate based, the credit repair we do is real estate based. And we also give you something called credit score insurance, so you never have to worry about your score again. So once we get it nice and high, we actually keep it there, and we'll be able to talk with you about that over the telephone to explain how that program works. Please make sure that you have a valid checking account. Those prepaid cards with account numbers attached are not going to work. So if you need help establishing that, let my team know. We can help you. Now, once you have a valid checking account, make sure that you don't have any NSFs, any non-sufficient funds fees in there. And ideally, you want 10,000 plus in savings. Now, if you do not have that, this is a lean in moment. If you do not have 10,000 plus in savings, we can definitely help you to be able to get there, to get the funds that you need. So don't worry about that. If you have it, great. If you don't, great. No problem. We got you. But it's ideal that we want to have some money saved away. If we don't, we'll be able to get you assistance. So again, if you don't have a checking account or have had past issues, we can get you a valid one. We can get you down payment assistance, which is basically getting you the cash you need to be able to show that you can close on a loan. And also, we'll be able to negotiate for you seller's assistance, where when seller's assistance, or you'll sometimes see it referred to as seller concessions, where we're asking the seller to be able to bring cash for you at the table to help you close. Those are all negotiations that we can engage in. Let's talk about the pre-approval process, right? So now you've gotten your credit right. You're ready to start shopping. You want to get that pre-approval done. First of all, I want to suggest get a loan officer that gets it. We have our own loan officers that we love working with in-house. They're fun, they're energetic, they're not talking to you crazy. They're really on the ball and they're super busy. Busy loan officers get it. It's not about you all who you have an existing relationship with. Perhaps you've been banking with a particular bank for so many years. They might not have the best program. So don't pick a lender based on length of relationship, banking relationship. Ask yourself these questions. Does your lender understand your goals, right? Does your loan officer have a support team? Meaning they should be busy processing loans, but do they have a processor? Do they have an administrative assistant? Do they have a team that's helping them get to the end goal? And how many years of experience do they have, especially with what it is that you're looking to achieve? That is super, super important. Discuss your goals with your loan officer. That's one of the main things that they're going to do initially. If they're not discussing your goals, they really, really could care less about you. They're only looking for what's in it for themselves. They're going to run your credit and review income documents. That's why we said we're here to get your credit to where it needs to be before you even get in front of the lender. We're making sure that you already have your income tax returns, W-2s, your bank statements, your paycheck stubs. Those are the income documents that they're going to want to review. They're going to determine which mortgage program you qualify for, what's in your best interest. And then they're going to discuss preliminarily terms of those programs, interest rates, closing costs, etc. Those things aren't locked in till the end of the loan. If these things check out, you're going to get that pre-approval and you're ready to shop. Now, with that being said, I need you to understand this. This is so important. That pre-approval that they send you, they'll probably email it to you, is valueless. The only value that it has is it gives your realtor license to take you out shopping. The real approval comes from not the loan officer, but the underwriter. We're going to talk about that very soon. Let's talk about pre-approval process and loan programs specifically when it comes to FHA or FHA 203K. That FHA 203K is where you can get additional monies for rehabbing the house. So with the FHA program, the minimum requirement is a 580 credit score. Just know that some banks may have overlays that require a higher credit score. So you're going to find that a lot of banks will want you to have a 680 or higher credit score. Excuse me, it's been a long day. We want to get that with y'all now for a long time. Let's talk about minimum down payment at 3.5% of the purchase price. Again, that's down payment money. You may not have it. That's okay. We can get you assistance. We're allowed to ask for up to 6% from the seller as seller concession or seller assistance. So what does that mean? Well, if you find a house, and let's say the house is $200,000, that's going to be the purchase price. We can ask for up to 6% back from the seller. That's $12,000, provided that they're actually going to be getting profit from the sale. So keep in mind, you all, there's some sellers that are selling their property. They're not going to see much profit. They might not be able to give you a full 6%. So that's why I said we have to actually negotiate to see what we can do. You can use the FHA or FHA 203K on a 1 to 4 unit family unit, FHA approved condos and mixed use properties. The maximum loan amount is based on the FHA county loan limits. You can find that just by going to Google and typing in your county name and the FHA loan limit criteria to find out what that is. So there's certain loans, like if it's a $2 million loan, it probably is going to be over the loan amount, the loan limit. There's both fixed and adjustable rates, and this property must be your primary residence for at least 1 year. And trust me, they will send people out to make sure that it is your primary residence. Now, when it comes to VA loans, those that have served in the military, it's a minimum 580 credit score. Again, some banks may have overlay requirements that require a higher score. No down payment is needed. You can ask for up to 6% seller concession, 1 to 4 family unit homes, and FHA approved condos. With these loans, there's no PMI or mortgage insurance needed, and it must be your primary residence. Let's talk about accepted offers and executed agreements. Please get a realtor that gets it. Get a realtor that gets it, gets you, and understands how to negotiate a contract. My God. Once you all have gone out and seen 1,000,001 houses, please, y'all, don't wear your realtor out. If you go into a house and you can tell from the gate that you hate it, turn around and walk out. Your realtor has probably 50 clients just like you that they're showing houses to, and it is physically exhausting. So narrow it down to homes that you really, really like. If you get to a home, walk into a home and can tell this is not your home, leave. And once you find the one that you love, try to avoid that whole, analysis paralysis thing and, making this a long, arduous process. But we want you to be happy with your house. So when you find the one that you want, you're going to meet with the realtor, sign off on the offer and other documentation. That realtor is then going to submit the offer to the seller's realtor, and that seller is going to have the opportunity to review it. Let's hypothetically say that the offer is accepted. Then that documentation, that accepted offer is sent to your lender for processing, which usually your realtor will do for you. Then the lender will be in communication with both you and your realtor. The lender, no doubt, will order appraisal. Now, with some lenders, they ask you to pay for the appraisal. With some lenders, the appraisal is wrapped up into the loan, so you don't have to pay separately for it. Home inspection is generally ordered by the buyer. So you'll find someone that you're comfortable with inspecting the home, pay them, not pay them if it's a friend or family member, and then they will do the inspection, give you the inspection report. If there's anything on that, and you want to make sure that you're doing this all within in a timely manner from when that offer was accepted. There's certain contingencies in that contract that make it so that you can't drag your feet on stuff. You got to keep the process moving. Title report is then ordered by your realtor, and one of the biggest things I suggest is have an attorney. That's something that we provide to all of our clients nationwide, is the ability to have an attorney at their side at all times without having to pay thousands of dollars or even hundreds of dollars of attorney fees. We just believe that that's something that everybody should have as they go through a real estate transaction. During the loan process, your lender is going to help you choose a loan program, discuss the loan estimates, e-sign some loan disclosures just showing that you were informed about certain pieces of information, and lock in your rate. Now, here's the interesting thing. Remember how we talked about the pre-approval really isn't worth much. When the loan is submitted to underwriting for approval, that's the approval that you want. That is the thing that gets you the dollars. So let's talk about underwriting. A mortgage underwriter is responsible to review your file and determine if the terms of your loan are good. They are looking at your credit, employment history, and financial history. Let me tell you, during your process, this right here is the most nerve-wracking process for most people. That is why we make sure that when you go into it, you don't have to be nerve-wracked, because all this stuff is good to go. The underwriter is basically looking for all the reasons why this can't work. Why? Because the bank usually, after closing on the loan, wants to be able to sell this to an investor. And they want to be able to show the investor why this is a good loan to invest in. So the underwriter is looking for anything that might cause suspicion or make them feel that you're not going to pay this loan. So they're looking at income, they're looking at documents, they're looking for any conditions that may need to be met. So let's say they're taking a look at that file, they see something wrong, they're going to give you an opportunity to make it right. Those are called conditions. They're going to be reviewing the appraisal report. So if the loan that was requested or pre-approved is $200,000, but the house that you want to buy was only appraised at $180,000, they're not going to give $200,000 for a $180,000 loan. They're going to say, listen, you all need to go back to the drawing table, negotiate this purchase price down to at least $180,000 before we're going to do anything. They're going to be reviewing your credit report. They're going to be looking at the title report of the house. So are there any liens on there? On any liens on the seller's home, anything like that? They're looking to see if you have any large deposits that just went into your bank account without a gift letter. That's suspicious to them. Do you owe child support? Do you have defaulted student loans? That's another thing that we help our clients with, is if they have defaulted student loans, how do we get those out of default so that when the underwriter looks, we don't have a problem? And also verification of employment. They're going to call your employer just to verify that you're still there. Once all of that is done, congratulations, you're clear to close. Those are the words, those 3 words, clear to close, is what every realtor lives to hear, what every buyer lives to hear, every seller lives to hear. So once you get those words from your underwriter, you get to choose your closing date. You'll sign any closing disclosures. Closing disclosures is, again, now that everything is final, the lender will go through all the fees that are involved in this loan, etc., so that you're fully informed. Your realtor should be scheduling with you a final walkthrough on the property. This is where you get a chance to take a look to make sure that everything on the property is as you first saw it or expect it to be. Um, I've done final walkthroughs where we went in and the kitchen island was gone, the carpeting was pulled up. That was a problem. And we weren't going to close on the loan until those things got remedied. So one time we walked through the pipes that burst in the basement. You know, these are things that we had to do a final walkthrough because it had been a while since the buyer had been in the property, and things sometimes change. Sometimes things change, the seller doesn't even know because they're living somewhere else. And so it's very, very important to do that final walkthrough. So that is it, you all. That is pretty much the entire process for a first time home buyer. I look forward to being able to help you. We have clients all over the US, all 50 states and territories. Our job, you all, is quite simply this: we eliminate the obstacles that stand between you and home ownership. Top ones are credit, down payment money, or just being able to get the cash that you need, and also student loans. But we hold our clients' hand from beginning to end, from point A to point, getting those keys in your hand. We lend you our attorneys. We help you with the contracts. We help you with the realtors. Like, we just thoroughly love and enjoy this process and want to help you every step of the way. So I hope that this short little video has helped you. I look forward to being able to talk to each and every one of you. Thank you for taking the time to listen in, and we will talk soon.